Essar Energy announced its results for the first half of the year 2010. Here is a chance to get the management's view on the performance. I took this opportunity to ask a few questions to the Vice Chairman of Essar Energy, Prashant Ruia, and the CEO of the company, Naresh Nair. How would you describe the half-year performance of Essar Energy?
I think Essar Energy has had an exceptional performance in the first 6 months of this year. Obviously, the highlight was the listing on the London Stock Exchange and joining the FTSE 100. But after that, in terms of the actual results of the company, we've been more or less in line with our projections. There are three parts of the business: power business, and in the oil and gas, refining and marketing, and exploration and production. On the power side, we continue to make significant progress in the delivery of our various projects, which get us up to 11,500 megawatts of power. We've also achieved financial tie-up for 9,500 megawatts of the 11,500 megawatts of power. On the refining side, we've had an exceptional half year. The production in terms of the refinery has been 7.28 million tons, which has been a record. And our expansion of our refinery is online for a completion by the middle of next year. On the exploration and production side, recently we signed a contract with the Government of India for 4 additional coal bed methane blocks. So overall, I do believe that our performance has been a satisfactory one.
We still hear that you are interested in businesses outside. So how do the two reconcile, that you have a company focused primarily on India, and then you're also looking at buying or acquiring businesses outside India?
Essar Energy's primary focus is in India and in the domestic demand for energy in the country. This is the reason why we are making such large investments in the country. Overall, we are investing close to $17 billion in these sectors in the country. This is divided between the power sector, where we are investing close to $10 to $11 billion, and another $5 billion in the oil and gas sector. Having said this, one of the key requirements of our strategy is providing linkages to the raw material for generation of power and for oil and gas. This is in the form of coal and in the form of oil and gas. I think it's fair to say that India does not have sufficient resources to meet all its requirements. And therefore, we are looking at international markets to access coal and oil and gas. So while the principal focus of the company remains on the domestic demand, we do look at opportunities internationally for our upstream requirements.
Prashant, Essar Energy is a company primarily focused on India and its market, as well as the potential for growth. Just if you can share some details as to what is so great about that potential, and how is Essar Energy planning to harness that?
I think India is at a very, very early stage of its development. On any index which you see, we are currently about a fifth or a sixth of demand of where China is today, with principally the same amount of population. In the energy space, in the power space, and in the oil and gas space, we are seeing significant amount of growth. Currently, India is suffering from significant amount of deficit of power. We currently generate in total about 150,000 megawatts of power. And if you take it on comparison, China is currently at about 850,000 megawatts of power. A very large percentage of the country still does not have access to power. So one of the areas which we are, as Essar Energy, focused on is in meeting this power deficit. We are seeing the same in oil and gas. The growth in consumption of automotive is extremely high. In the last quarter, we have seen growth in the region of 30% on an annualized basis. And despite this, we have currently about 1.5 to 2 million cars per year, as compared to close to 11 million cars per year with China. Even last year, when there was a crisis, India grew at 6.7% of GDP. And in the last 2 quarters, we have increased that to about 8.6% of GDP growth. More or less, we see over the next few years, India having growth in the region of 8 to 9% of GDP, making this the second fastest growing economy in the world after China. So given where we are at the early stage of development in India, we do see a very long and bright future for the country.
Prashant, then how would you describe the overall strategy for Essar Energy?
Essar Energy's strategy is to create a low-cost integrated energy company which is positioned to capitalize on the growing demand for energy in India. These are in two sectors, in power and in the oil and gas sector. India has a huge demand for power and a huge deficit for power in the country, and we are gearing ourselves up to meet this power deficit. In the country currently we have 150,000 megawatts of power and a significant amount of deficit. We are investing heavily in meeting this. In the oil and gas sector, similar numbers. Having said that, one of the key linkages for power and oil and gas is the upstream requirement for coal and requirement for oil and gas. India does not have sufficient natural resources in these areas, and therefore we are looking at international investment in coal and in the upstream areas of oil and gas. Also, in our refinery, we will be producing certain very high quality petroleum products which have a home internationally, primarily in the developed markets. And one of the other strategies of the company would be to find natural homes for these high grade petroleum products. So overall, the strategy is to meet the energy demand for India.
Naresh, as the CEO of Essar Energy, how would you describe the operating performance for the first half year?
The first half year operating performance of Essar Energy has been a very solid performance. We have 4 operating power plants in our power segment and 1 refinery in the Wadinar of a capacity of 300,000 barrels per day. In the power segment, all the 4 plants put a very solid performance with a plant availability factor of above 94%. And we saw an increase in revenue of close about 18%, largely coming from full year contribution from Algoma's plant and also increase in the tariff for Bandar plant effective April 2010. In the refining segment, the Wadinar refinery processed 7.28 million ton of crude during this half year, which is the highest throughput recorded by the refinery since inception, reflecting a capacity utilization of 128%. On the EBITDA side, the EBITDA was lower, largely driven by that in the last half year we have inventory gains due to increase in oil prices, and there was also a contribution coming from our retail business which was not available in this half year.
Let me ask you about Essar Energy's exploration and production business, which is a smaller one but has huge upside in terms of potential. Can you take us through as to why you feel so bullish about it?
You're right. Essar Energy's exploration and business is where we see a huge value going forward. Today we have about 17 exploration and production blocks. One of the major highlights during the last half year has been that the Government of India has awarded 4 more CBM blocks to us. Now with these blocks, the total resource in our portfolio is 2.1 billion barrels of oil equivalent. Our focus right now in development of the Raniganj block, this is a block in the eastern part of India where it is a CBM block. Currently we are producing about 18,000 square meter of gas per day basis from the 15 test well, which is gradually increasing as we are dewatering these wells. We have also drilled additional 9 wells during this period in this block, and we are committed to start the commercial production in this block by the end of this year.
The Indian government recently announced the deregulation of gasoline prices. How crucial it is according to you, and how does it impact your business given your presence in the retail distribution?
This has been a very positive development during the last quarter, where Indian government has partially deregulated the auto fuel sector in the country. Gasoline has been fully deregulated, and we expect that gas oil will get deregulated in the near future. This will have a major positive impact in our oil and gas business. Currently, we have 1,350 retail outlets spread all over the country, but those retail outlets were not making any significant contribution to our revenue and as well as to our EBITDA, because of the level playground was not available to the private sector players in the country. But with this change in the regulatory framework, we see there is a huge opportunity for the private sector players to capture the market. We are gearing up for this, and we have all our plans ready. Our plan is to expand our retail network to 1,700 outlets by March 2011, and if we see further deregulation taking place, we'll expand this to 3,000 retail outlets by March 12. So on an overall basis, we believe that this move is a very positive move and which will provide a significant contribution to our revenue and EBITDA going forward.
In terms of the supply linkages for the power business, how confident are you that you will be on target and on track?
All the coal-based power plants in India have been experiencing this issue about the forestry clearances coming from the Ministry of Environment. Now, recently, the Prime Minister's office has constituted a high-power committee of the ministers to look into this matter and to give the clearances to those plants where significant development has been done in terms of the construction and in terms of development of the project. Now, that committee, fortunately, during the last quarter has visited both the plants in Mahan and Tori, and as per our understanding, they have given a very positive report, and we expect now approvals will start coming in the next few months. In order to ensure that even if there is some potential delay in getting these approvals, we have already applied for the coal linkages during the interim period, and we are quite confident, given the development stage of both the projects, that these linkages will be provided.
Naresh, how confident are you that in terms of overall projects, both for oil and gas as well as power, the entire plan is on track and the timelines will be met?
All the power projects, which will take the total capacity to 11,472 in 2 phases, are currently on schedule and within budget. As we are currently implementing projects worth about $11 billion, both in power and oil and gas. During the last half year, significant progress has been achieved in all the projects. The Wadinar Phase 1 is now ready to be commissioned, and we expect this to get it commissioned during this quarter. The Salaya 1 is 62% complete and expected to be completed in first quarter of 2011. The Mahan 2, which is another coal-based power plant of 1200 megawatt, that is 55% complete, and we expect the completion in the third quarter of 2011. So far as Wadinar refinery expansion is concerned, which will take the capacity to 375,000 barrels per day and complexity to 11.8, we are targeting to complete the mechanical completion by March 11. However, there is a 3 months delay which we are experiencing in respect of the 2 units, which is largely driven by certain deficiencies which noticed in the reactors at the vendor's workshop, which is currently being rectified, and we are taking ways and means to ensure that this delay is squeezed, and we are quite confident that we'll be able to start the production from our expanded refinery in less than 1 year from now. So on overall basis, we are quite confident that we shall be completing all our projects which are currently under implementation within the time and within the budget.